Facebook Live as well. And my name is Shirley Pang. I am the managing attorney of our tax law project from Legal Aid of Nebraska. And I have my two co-presenters here as well. Shaylana Dunwall, she's also at Legal Aid as my tax fellow, and Andrea Buckley from Iowa Legal Aid. And we're here to talk about the Advanced Child Tax Credits, Part 2. If you missed our presentation back in August, it is recorded on our website as well. But we just wanted to fill you in on the updates of the Advanced Child Tax Credits and what's been going on at the IRS. If you have any tax issues, our contact information is on the last slide. So if you have any questions during this presentation, you can put in the comments on Facebook or our question and answer portal on Zoom.
Okay, everyone, thanks for joining. We're going to start with just a brief overview of what the child tax credit is and how it's different this year. So the child tax credit is a tax credit available to most families with minor children. For the purposes of this credit, minor means they're under the age of 18 on December 31st of each year. So a credit, just some basic vocabulary, is something that reduces the amount of tax owed by the taxpayer. Generally, the credit is $2,000 per year per child, with up to $1,400 of that being refundable. That means that if the amount of credit exceeds the amount of tax owed, the excess amount, up to $1,400 per child, can be applied to the taxpayer's refund. Most years, this credit is available only to taxpayers with earned income. Generally, this is W-2 wages. So basically what that means is if an individual's only income is something like Social Security, retirement, disability, they may not be eligible for this tax credit, even if they do have minor children that they support in their home. So the credit is generally applied to the tax debt when the taxpayer files the spring of the following year. This year, as we all know, the child tax credit is a little bit different. The American Rescue Plan Act has significantly increased the credit for most families. Approximately 88% of families with minor children are eligible for this expanded credit, so it's helping a lot of people. The eligibility is based on the taxpayer's income and filing status. So we've got the limits right there on this slide. As a rule of thumb, if an individual was eligible for the full amount of the stimulus checks earlier this year and last year, they will be eligible for the child tax credit if they are able to claim the child in 2021. A taxpayer with minor children living in the home is eligible for the normal child tax credit if their income is above these limits. So if a taxpayer, for example, is married filing jointly, the combined income is $200,000. They're not eligible for the expanded credit, but they're still eligible for the normal credit amount. The credit is also a larger amount than normal. Again, this is for the 88% of taxpayers with children who fall in these income brackets. So depending on the age of each child, the full amount of the credit will either be $3,600 or $3,000. Currently, these changes are not permanent. This applies only to the 2021 tax year. So another change currently and temporarily, again, just for the 2021 tax year, the credit is available to all families with minor children, regardless of whether or not they have earned income. So a lot of the families who are supporting children on Social Security, are getting the credit when they don't normally. The amount of the credit, as I mentioned, depends on the age of each child. So it's determined based on the age the child is on December 31st, 2021. The child is under the age of 6, the amount is $3,600. If the child is between 6 and 17, the amount is $3,000. Families eligible for this expansion will receive half of the credit in advance payments. So 1/12 or 1/2 divided by 6 will be made in a direct deposit to the taxpayer's accounts or as a check each month around the 15th for the last 6 months of the year, July through December. And then the other half of the credit will be applied to the taxpayer's filing like it normally is. If parents are not filing jointly, then only one parent is allowed to claim each child. So one Social Security number only gets one child tax credit. So normally if there's some sort of custody agreement, this will determine which parent is able to claim the credit. So some of the great results of this expanded credit, 88% of families with minor children are eligible to receive the higher credit amount. Based on the numbers we've seen so far, just from the first couple of months, food insecurity has greatly decreased for a lot of families in this country, especially with kids. So families with kids and incomes below $50,000 a year, food insecurity fell from 26% to 18.5%. This is something that is expected to continue to decrease as the monthly payments continue. The credit is also expected to lift 50% of the children currently living in poverty out of poverty. And again, this is particularly impactful for the families that have little or no earned income, since they're not normally eligible for this credit, and many of those families live very close to the poverty line.
All right, so let's talk more about those advance payments that Shaylana mentioned. That's probably, one of the biggest changes that we're seeing this year. And of course, the current state of legislation and kind of where things are, this is all temporary for 2021. So it's a new situation for all of us to be in, and possibly for only this year. But like she said a couple slides ago, it's unique this year that the child tax credit involves advance payments. So we're already in this period where these advance payments are happening. You may have already been getting payments or seeing issues with these payments, or you have, clients or people you work with who are receiving these. So what this legislation does is gives an advance payment for half of the credit, essentially. So it takes the full amount of the credit that you would qualify for, cuts it in half, and then divides that half over the last 6 months. So I think the important thing for people to realize is if they're getting these advance payments, that's great, but they should still plan on filing a 2021 tax return, because they're not getting the full payment right now. It's not the full payment that's divided. So there's still going to be credit that they will need to claim on their 2021 tax return. It's like I said, a very new situation for most people, and it can be kind of complicated. So as you're talking with folks, making sure they understand they should still plan to file a 2021 tax return next spring is really important. The way that those payments are being paid now is they are paid on the 15th of the month of each month. So let me see, that's just last Friday. Someone probably got a payment if they're getting their advance payments. And these payments are being deposited into the account listed on your tax return. If you had that, this is similar to the stimulus check that we saw last year and earlier this year, trying to get the money into people's hands as soon as possible. You can go ahead and advance the slide. So, with all of these new things, of course, there's things that can kind of derail the idea of getting this money into people's hands quickly. The IRS, with the goal of paying these payments out to people who need them now, the IRS is basing eligibility and family size and, how do we, who do we pay this money at this time? They're basing all of that on information that they already have. So for most people, that's going to be based on their most recently processed tax return. So for a lot of us, if we filed our 2020 tax return, the IRS has processed that, it has that information, and they're going to look to that to decide where to send that money, how much to send that money, what kids are involved for them to send those advance payments. Maybe learning a lesson a little bit with the stimulus or previous programs like this, stimulus from, like 2008, we had another stimulus program. The IRS thought there may be problems and devised a way to get updates for changes in that information. So there are portals, and we have the link to the IRS page for these portals. The portals the intent is to give a person an ability to inform the IRS when things have changed, right? Because even if we filed a 2020 tax return last February or March, it's been 6 months, a lot of things can happen. So some of the changes that might be anticipated would be if you have a new baby born or a child adopted in 2021, obviously the IRS wouldn't know about that. They're not on your 2020 tax return. You may have income changes that affect your eligibility. If you win the Powerball, you might want to let the IRS know you probably don't qualify if you got that big jackpot. But obviously other people have smaller income changes that could affect their eligibility as well. We're going to touch on custody arrangements when parents are alternating children back and forth. That obviously can cause some problems, and we'll touch more on that going forward here in the slides. Or if taxpayers want to opt out of advance payments. That portal exists to allow people to make those changes. But on the next slide here, we can see the dates of the anticipation when we could do those things. So this little chart is on the IRS's website for the portal. Certain things we're able to do now. If you want to unenroll from payments, you could, as of June 21st, you could log in and just do that. Same with making changes for your bank account. But some of the things that seem maybe more pressing or more related to eligibility, such as reporting changes in your income, changes to your dependents if your filing status changed, all of those, the IRS anticipates the portal being able to handle those changes this fall. Obviously, we are already in fall, so we don't really know when we can make those changes. So that might be causing a problem for people. They know they have those changes they want to report, but the portal simply doesn't allow us to do that yet. So that can be a problem. I'm going to turn it over to Shirley, and we'll talk a little bit more about the portal.
So if you haven't checked out the irs.gov website, you can sign in or create an account, and you can check your transcripts, your IRS statuses, where your stimulus payments are, and for this particular webinar, the child tax credit portal. So if you go to the irs.gov website, one of the tabs on the website is manage your child tax credit payments. And when you click on that, it will take you to the child tax credit portal, and it will give you information, FAQs of what qualifies for advance payments. And then basically these two tabs, unenroll from advance payments, and also a non-filer, submit your information. So for the child tax credit update portal, it just, depending on which tab you push, for managed payments, you can basically opt out or check your eligibility. And so for the managed payments, you want to make sure you sign in as well. And that way they will do an ID verification, make sure it's you that is signing into the portal, and then gives you the option to opt out if you wanted to unenroll from advance payments. And we will go through hypotheticals on why you might want to do that. Next slide. There's also a tab for check your eligibility, and that way you can see whether you are eligible for these payments or where your payments are. On this particular slide, you can see that there are no process payments at this time. And then there's also links to questions and answers that might apply to your situation. And then at the very bottom, unenroll from payments, that will suspend those checks that are automatically going to your account. And if you qualify for them at the end of the year where you file your 2021 taxes, that's when you can get all that money back. Or if you're just unsure, you might want to unenroll from payments and not risk getting an overpayment when you file your taxes. And so we have a couple slides that just show you that it's not just one tab that you hit that unenrolls. You have 3 separate slides. First, unenroll, and then you review and submit. So even though you click unenroll, you want to make sure you get to the review and submit page so that you agree that to unenroll, you will automatically be unenrolled for the entire 6 months or the remaining 6 months, and will not be able to re-enroll. And then, but you can still claim your tax credit when you file your 2021 taxes.
So opting out, there may be different scenarios where you may want to opt out. And it gets a little complicated. So earlier we mentioned, these credits are linked to a social security number, right? So a child has one social security number. We can't be splitting it between parents. So that also means that parents have to work in tandem to deal with some of these issues. So like if parents who file a joint return decide they didn't want the advance payments, or something happened, right, they won the Powerball and they got that big jackpot and they're like, we're going to unenroll so we don't get this extra money. They both have to take steps because they each have essentially an account with the IRS based on our social security numbers. So, if parents who file jointly decide they want to opt out, they both have to go through that process. If only one of them opts out, the other one is still in the system and they're going to get like half the payment. So it's just kind of a complicated situation. We also have situations where maybe there's a custody agreement, maybe parents who alternate children each year. So, that brings up a complicated situation, right? Because we're looking at 2020 tax return information, but whoever claimed the kid on the 2020 return is maybe not the person who's supposed to claim the kid in 2021. The parent who knows they're not supposed to claim the kid in 2021, that parent could go in and opt out at this point. If they don't opt out, they could be liable where they'd have to repay the advance credits. And we'll talk about that in a hypothetical in a little bit here. But the one person would have to opt out. We also would have to see the other parent opt in, which isn't available on the portal right now. So the portal is a great idea, but right now it really isn't functioning in a way that I think is helpful to most people. Like I said, we've got some hypotheticals to talk about that. Shirley also mentioned, or we had a picture when Shirley was talking of the portal, the picture of the portal, and it had a button that said Nonfilers. I'll have you go ahead and advance the slide, Shaylana. So non-filers, there's people out there who don't typically file a tax return for a lot of reasons. An example of this may be your only income is SSI or Social Security disability. That income isn't taxable, so those folks typically don't file a tax return. If you're in that world and you're not getting the advance payments and you think you should be, you could go through that non-filer button on the portal website and do and basically sign up for the advance payments through Free File. It will ask you information about yourself and your dependents. people who didn't get the economic impact payments or the stimulus payments, they may be wanting to do this as well, because it'll get that information into their system. So this tool can be really helpful. Like I said, if you don't normally file a tax return, you're not required to do it based on your income, and you're not receiving the advance payments right now, you missed a stimulus payment, this may be a really good tool. However, for every great tool, there's some exceptions, right? You may not want to go down that tool, that path with the Nonfiler tool if there's a reason for you to file a 2020 tax return. I'll give you an example. Maybe you are on SSI or disability income, right? But you have a part-time job. You might not earn enough that you have to pay taxes or you're obligated to file a return, but you may have withholding out of your wages. So you would want to file a return to claim those as a refund. This would not be a good, you would not be a good candidate to use the Nonfiler portal, because essentially when you use that portal, it takes the place of a regular tax return. So there's going to be people who want to still file a regular tax return. Same with folks who have gross income over $12,400, which is the single standard deduction. Those folks may be really needing to just file a tax return instead of the Nonfiler tool. If you're someone's dependent, you do not want to do the Nonfiler tool. Or if you were married at the end of 2020 and you're not including your spouse's information. So it sounds like I talked a lot more about why you shouldn't use the tool. This might be a situation if you have questions to call your friendly local low-income taxpayer clinic if you're in Nebraska or Iowa. We typically answer questions like this or try to help navigate. I will also, while it's in my brain, make a plug for VITA programs. VITA is a volunteer income tax assistance program. Those are usually operating in the spring to help people do free tax prep. So when we're talking about planning on filing your 2021 tax return, remember VITA. It's a great service for you to go for. All right, Shaylana, let's talk about some technical stuff.
I find my unmute button. So I'm sure that anyone who has had an issue, has talked with somebody with an issue, is not surprised that there have been technical issues with the IRS regarding the child tax credit payments. There's been a couple of months where I think about 2% of eligible taxpayers haven't gotten the credit. There's been some issues with the amounts of the credit. So the IRS issued a statement earlier this week. So if there is a split payment that's causing a delay, for example, one spouse opted out, but the other did not, this can, with some people, cause the child tax credit amount in September to be a little higher than it should have been. And if that happens, the individuals will receive a letter from the IRS, and they will also have their amount for October, November, and December reduced slightly so that the overall payment does still total 1/2 of that total child tax credit. And there's some numbers there about approximately how much that would be. The other thing is for people who are missing a payment, when that's processed by the IRS, which I'm sure is not surprising to anybody who's tried to contact them recently, can take a while. But if they get that processed, that missing payment processed before the end of the year, that amount will be applied equally to the remaining payment amounts. So in theory, 1/2 of the credit should be paid to each qualifying taxpayer by December. If that doesn't happen, like Shirley mentioned earlier, any amount of the credit that should have been paid out will just be added to the taxpayer's 2021 refund in the spring. And for those of you who are like, this is a lot of numbers, I'm not sure what to do, don't worry, the IRS will be sending a letter in January or February to every taxpayer who was eligible to receive child tax credit or received some amount of child tax credit. And it'll have the total amount of credit received in that letter. And then when you file your taxes, much like last year when it asked how much stimulus money you got, it'll have a question asking how much child tax credit money you got. You can just put that amount from the letter into your tax return. If it doesn't look right, contact us and we can try and help. And then the IRS will do the math and make sure that the taxpayer is getting the full amount of the child tax credit that they deserve.
So we're going to start our hypotheticals. So the first hypothetical is just a simple case. Lydia and Chris are a married couple with one 2-year-old child. They file taxes, married filing joint, received all of their stimulus payments, so they know that their income is underneath this threshold. Their income is less than $150,000 and was also below $150,000 on their 2020 taxes. Do they need to do anything to get their child tax credit advance payments? The answer is no, since the IRS has their account information, their income and family size has not changed, and Lydia and Chris can expect to get their monthly payments of $300 automatically.
All right, so let's make it slightly more complicated. Liz and Austin are married, they have a child, they do their taxes jointly. In 2020, they were right in that area where they're eligible for the child tax credit, but now Liz got a really good promotion and she's gonna get raised. Good for Liz. Do they need to make any changes before getting their child tax credit? We'll pretend, let's say they're, we're right now in October, they've been getting it, but now their income's gonna increase. Yeah, they really should, if they know they're going to be outside of the eligibility for those advance payments. That would be a great example of going into the portal and reporting that they are no longer eligible and they don't want those advance payments, or at least reporting that the income has changed. The portal doesn't allow us to do that yet, but this would be the time when they would want to do that. I feel like there's going to be a lot of people who maybe aren't able to do that because the portal's not open yet, or by the time they do it, there's going to be some issues. The letter that the IRS is going to send that we mentioned in January or February, that's going to give us the amount of the advance payment. The taxpayer will be able to essentially fix it on the return, do the calculation to make it right. But of course, it would be best if the portal was open so these people, so Liz and Austin could report the change in their income. In a perfect world, that's what they would do in this hypothetical.
Okay, hypothetical number 3. Anne and Ben are parents to 2 children, aged 10 and 12. They're divorced, and per their custody agreement, each year they switch who claims the children on their taxes. Anne has even years and Ben has odd years. What do they need to do for the child tax credit? So since the advance payments are part of the 2021 taxes, which is an odd year, Ben will be the one who claims the children on that tax return. However, since the IRS is basing it on the most recent information they have, 2020, an even year, the IRS is going to start by making the child tax credit payments into Anne's account because she claimed the kids last year. That's the most recent information the IRS has. Anne's going to want to opt out of the payments because if she doesn't, when she files her taxes and does not claim the kids because it's an odd year, she's going to be liable to repay the full amount of that advance payment, which is $3,000, which is a lot. And coming up with that money can be really difficult. So Anne's probably going to want to opt out. At this point, she and anyone else in this situation will have already gotten some of the advance payments. Taxpayers can continue to opt out until November 30th, and it will opt them out of all the future payments. If you or somebody that you know is in this situation, we highly encourage opting out of all of the future payments, because you've got some advance payments that were maybe incorrect, but the fewer advance payments you get, the less money will have to be paid back to the IRS, which will create less of a burden on the taxpayer. Ben can choose to opt into these payments at whatever point in the fall the IRS opens that part of the portal. Otherwise, if he does not opt in, he will just get the full amount of the child tax credit. So the $3,000 times 2 kids, $6,000 added to his tax refund when he files in the spring.
Hypothetical 4, John and Faye are separated parents of one 3-year-old child. They're in the process of getting divorced, but it isn't finalized yet. So according to the IRS, they're still considered married. John claimed their child on the 2020 taxes, and they agreed that Faye would claim on odd numbered years moving forward. However, now John feels this is unfair since Faye's credit is larger than his, and he would like to divide that credit. What should they do? Unfortunately for John, the credit cannot be divided by the IRS. The IRS just does not want to be involved in family issues. So only one parent can claim the child each year if they file separately. So if John feels very strongly, he can try to find a solution that works for both parents in the divorce custody discussions. However, if they stick to their original agreement, Faye will claim the child in 2021 and get the full amount of the advance credits, and John will need to opt out of the advance payments. So we get this question a lot on our intake lines. And when it comes to family law, the IRS does not want to get involved. So in that case, they just have to go to mediation or fight through it in district court or county court when they're arguing about their divorce or custody issues.
Along that same line, let's take Allison and Nick, who are divorced. They have a minor child. They alternate the years according to their divorce decree. So Nick claimed the child in 2020. And because that's the most recent information that the IRS has regarding everybody at this point, he's been getting the advance payments. In this case, he knows that they're Allison's, and so he has been doing the right thing and writing her a check for the difference every month. That is a wonderfully moral place to be, and I commend Allison and Nick for cooperating. But how does that really affect with the IRS, right? The IRS isn't going to have a way to know that Nick is essentially reimbursing Allison or sending Allison the payment that she should be getting, that he's actually getting. So in this situation, because the IRS doesn't really know what's happening on the back end once the money's paid out, what's going to happen is Allison will claim the children in 2021 like she's supposed to under the divorce decree. She will say that, and according to IRS records, she did not receive any advance payments, right? And the IRS did not pay her anything. So she would be awarded the full amount of the child tax credit. When Nick goes to do his return, the IRS will see that he got paid that advance payment that he shouldn't have because he's not claiming the kids. And so the IRS is going to have him pay back those amounts. So in a perfect world, Nick and Allison, hopefully like Allison will reimburse him and they'll make it all even. But really in this situation, Nick should be opting out of those advance payments because he's going to have to repay them on the back end. As Shirley was saying, the IRS really doesn't have a way to be involved in family law issues in a meaningful way. The rules are the rules, and the IRS pays credits and things based on what the rules are. We have seen these a lot, this issue come up a lot with stimulus payments as well. Based on what was in the IRS system, maybe one parent or one spouse got the advanced stimulus payments when the other person should have, or the payments for the kids were sent to the wrong parent. That's a question we get pretty commonly, like, what can the parent do about it? What can I do to my spouse or my ex-spouse or whoever that got my payment for me? There really isn't a good mechanism in the IRS to go and fix it after the fact. For the advanced child tax credit payments, there is, right? It's filing the 2021 tax return and evening it up there. But for those past payments, like the stimulus payments, if everything's been filed and it's just a matter of the wrong person got it, sometimes the best option is to go to either family court if there's like a divorce or a custody case pending, or maybe small claims court if someone, my person I filed a return with, or someone claimed me incorrectly. Sometimes doing the court route instead of the IRS is going to be the best option. Given the way things are processing with the IRS, it's definitely going to be faster than if you try to navigate the IRS. Not to say that the IRS can't resolve issues, but generally when it's a family law situation, difficulties between the parents because of their sort of situation with their relationship, the IRS really is not the place to try to litigate that. It's going to be in family court, which is frustrating, but sometimes that's the best answer. But Nick and Allison, they're going to work it out. I feel really strongly that they're going to make it right with each other.
Hypothetical number 6. Ben and Jason adopted a baby in 2021. Congrats. They're married and they file taxes jointly. Are Ben and Jason eligible for the advance payments of the child tax credit? So as I mentioned earlier, the IRS measures family size and children's ages based on what it is on December 31st. It's also when they measure marital status. So if you're married on December 31st, as far as the IRS is concerned, you're married all year, even if your wedding was on December 30th. So since Ben and Jason's baby was adopted before December 31st of 2021, they're going to get that full child tax credit amount. Like we mentioned earlier, the IRS doesn't know that they adopted the baby, so they're not going to get the advance payments. When the portal opens to update family size, they can choose to log in and update that information, let the IRS know that they now have a baby. Otherwise, when they file their 2021 taxes in the spring, the full amount of the child tax credit, that $3,600, will be applied to their refund. And this is true even if, for example, a child was born or adopted in October after the advanced child credit payments started going out. The amount of the child tax credit is the same regardless. It's just measured based on how it is at the end of the year.
Hypothetical 7, Bill and Nancy are divorced parents of one minor child, Kelly. Per their divorce decree, Nancy gets the child tax credit in odd years and Bill gets it in even years. Bill gets the advance payments and does not opt out. Will Nancy still be able to get the full amount of the child tax credit for Kelly when she files her taxes in the spring? And the answer is yes. Nancy will not be penalized by the IRS as a result of Bill failing to opt out of payments. She will be able to get the full credit amount when she files her taxes. But like we said before, Bill will be liable to pay back the overpayment, but this will not affect Nancy. There is an exception for a limited number of people who are overpaid, and it's very fact specific. They have to, make under a certain amount. And so we're not going to talk about it in specifics, but for a very limited number of people, if Bill falls under this category, he won't be liable to pay back the overpayment. But for the majority of people, yes, they will have to pay back the overpayment.
All right. So let's take Isabella and Katrina. They have 2 minor kids. They file, or they have their income is less than the 150,000. They file a joint return. So sounds like they should be getting their payments, right? But they don't get that August payment. They're getting all of the rest of them now. They go into the portal, which is available for this issue, and they see that, oh, that payment was not ever issued. What can they do? And I think this is pretty common right now, people missing a payment, or, it's just not running as smoothly as we all hope, right? So checking the portal is a great step. Sometimes that's not helpful, or, the portal doesn't work in the ways we all want it. In this situation, they can try calling the IRS, trying to, get down the bottom of like, what is taking so long or what happened. I think we've already said it today. It is really hard to get through to a human at the IRS for lots of reasons. I don't necessarily fault the IRS for that, but it is very frustrating to try to resolve things through the phones. If they're not successful, which they may not be, unfortunately, like the advice to give is they may just have to wait and report that payment when they file their 2021 tax return. I mean, if you think about it, anything you don't get in an advance payment, you can claim on the return and claim it as a refund, kind of like any other year. It's not the most helpful for people who are really relying on these advance payments, which is the unfortunate part. But because we're right in the middle of it, filing a return is a good option. Like filing the 2020 return is the way to fix sort of these current issues. It doesn't fix, what I mentioned earlier about like maybe previous stimulus payments and all that kind of stuff. But right now, if it's the problem with the advance payment, we know the fail-safe is filing that 2021 return and reporting anything that was missing, or doing the calculation there. If you're using tax software, I would anticipate the tax software will walk you through, ask you questions, what you received, and do the math and help you claim the right amount. So doesn't help Isabella and Katrina right now, but at least they can file a 2021 tax return and then get the full amount, whatever they don't get in an advance payment.
Hypothetical 9. Maria is a single mom and claims her children every year. She does not normally file a tax return because her income is below the filing requirement. She filed a 2020 return to be eligible for the advance payments, but wasn't processed until late August 2021. So she didn't get the advance payments for July and August. How will this affect her payments? So families that did not get July, August, or September payments, and this goes for October and November as well. Once they start getting their monthly payments, they will still receive the total advance payment amount spread over the months that they do get the payments. So for Maria, since she will get payments for 4 of the 6 months, instead of getting 1/12 of the advanced child tax credit amount each month, she will be getting 1/8 of the advanced child tax credit each month. So that adds up to half of the credit, and then she'll get the other half as part of her tax return in the spring.
I just want to add, I want to jump on that, Shaylana. I think I have had a lot of questions from people where it's still pretty common that their tax returns, their 2020 returns, have not been processed. I think this year was a really weird year. I mean, what hasn't been, the last year and a half. But I think there are people out there that maybe filed a return, but for whatever reason, it is held up. Kind of the same thing that we've been saying. If it doesn't get processed, their remedy is to file a 2021 tax return. It doesn't help, because I know a lot of people have heard about these advance payments and are really like, this is something that I can use and that can help me. And unfortunately, it's not in some scenarios, and there's not really a way to speed that up other than waiting to file a 2021 tax return. So I've talked to a lot of people that's been my advice, got to file that 2021 tax return. But hopefully things will get straightened out by next tax season and we won't see such delays in processing. But I know that has also been an issue for a lot of people this year.
Unfortunately, we can't control the IRS and have them speed up our clients' tax returns. We would if we could. So I know it can be really frustrating for people to not be getting these advance payments, especially if, you know, you're in a difficult financial situation right now, which many people are. The best news we have is that no matter what, you should get the full amount of the credit by the time you get your refund next spring. And again, that's not as soon as ideal, unfortunately, but it should get processed in a few months.
So if you have any questions, there is still time to put in your questions in our Q&A chat box or on Facebook Live in the comments. But if you have any specific tax issues, like Andrea said, we do not file taxes, but we have VITA sites all over the state of Nebraska and Iowa that would file taxes for you. But if you have any IRS issues after you file, then you can give us a call at Legal Aid of Nebraska or Iowa Legal Aid. We're the Low Income Taxpayers Clinic. And so if you are not in Nebraska or Iowa, you can go on the irs.gov website and find your local low income taxpayers clinic in your state. But we are available to help with any federal tax issues. And unfortunately, a lot of people are in your situation. If you are waiting for your tax refund, your child tax credit, your stimulus payments, there are millions of tax returns not processed and a lot of mail still not opened. So we're gonna, do our best to try to get answers for you. So give us a call, or if you have questions right now, you could just put them in our chat box.
While we're giving people a chance if they have any questions, I would like to, we said it at the top, but just remind people that part of this 2020, the changes to the child tax credit in 2021 is that there's no requirement for that earned income. So if you have people you work with who are on SSI or SSDI who don't typically work, they should think about filing a tax return as well, and going to a VITA site would be a great way to do that this spring. Those folks don't think about filing taxes because they don't have to. And so this is a great year that they could qualify. They may not be getting the advance payments and just not realize that they could qualify for this. So it's a really great change, even temporary. It helps a lot of people. So I like to remind people of that because it sometimes gets lost in all the talk about advance payments, because that's on everyone's mind right now. All right, it looks like there is a question going back about families who have separated and where there were stimulus payments that went to the wrong person. I can't, it's hard for us to like give specific, I mean, we certainly aren't giving specific legal advice here. There's lots of questions that attorneys ask before they give specific legal advice. Generally, when we have those payments that are with particularly before these advance payments, right? So previous tax years, if one spouse got a stimulus payment that the other spouse should have gotten. And we saw that a lot with spouses maybe having a joint return that they filed together, and they were together at the time they did their taxes, but by the time the stimulus was paid, they had already separated, and maybe, wife has a different bank account or whatever. There's not really, if they claimed it on their tax return, or they, were filing taxes and the stimulus just went to the wrong person, the IRS really, there's not really a good mechanism to fix that with the IRS. So it's going to be a family law issue. Going to small claims court or divorce court or something like that to address that. I don't know that I can answer a lot more about that in this situation, but that's generally where those are for people who have problems the wrong person get the stimulus. Now, if there's identity theft, if it's, I didn't get the stimulus because there was an identity theft issue, that is something I've helped a number of clients deal with that in particular. So that's certainly something you might contact a low-income taxpayer clinic, whether it's us or a different state if you're somewhere else. With identity theft issues and the stimulus, that's definitely something that's more tax oriented. The remedy is more tax oriented. One more thing I don't think we plugged is there's also the Taxpayer Advocate Service, which we call TAS. They are an independent office within the IRS. Sometimes they are able to help with certain issues that you can contact them. Low-income taxpayer clinics are under the umbrella of TAS, but sometimes TAS can do different things than we can. So if you go to the IRS website and search Taxpayer Advocate, you can get their information as well. So for some of these things where people are having a hardship or problems, that's a good place to try to go as well.
I'd also add, for those of you that have more fact-specific questions, the best move is probably to contact us and see if we can examine the information and see what's going on. Obviously, everybody's family and situation is different. We try to do hypotheticals that cover some of the general ideas, but most of the time it works, and obviously everyone's situation is different. So some things are just better if you just contact us.
Thank you, everyone. It seems like maybe we don't have any more questions, but thanks for joining us today. It's always lovely to talk about taxes, don't you think?
We'll stay on for a couple more minutes, but if there's no more questions, then have a great rest of your afternoon.